Hello, welcome to the European Open briefing for Wednesday, November the 9th. I'm Rafi Paratian, currency analyst at XM.com, and we're going to be looking at the latest developments in the currency markets today. So the main news this morning is, of course, the results of the US presidential elections, where Donald Trump has become the surprise winner of the presidential race. He beat Hillary Clinton by pretty significant margin, and that's created quite a bit of turmoil in financial markets. We've seen the dollar plunge, the Mexican peso hit an all-time low against the dollar, and we've seen gold, safe havens such as gold and government bonds surge as well. Global stock markets around the world are down sharply as a result. Asian and European equities are already down, and US stock futures are pointing that US stock market will also open with heavy losses. And of course, the large fluctuations, particularly the dollar against the yen, has caused Japan's finance ministry to warn markets that they may intervene. So let's start with the dollar versus the yen. We can see here that that big plunge against the yen, where the dollar fell to below 102, it fell to a 5-week low of 101.15 yen. It's since rebounded a little bit to back above 102 yen, but that's sharply down from hours ago, where it was above 105 yen. That was based on the polls that were showing that Hillary Clinton was likely to win. So this big turnaround has caused quite a bit of an upset in markets. Japan's vice finance minister said that if the speculative moves continue, they may take necessary steps. So if we do see further falls in the dollar against the yen, we might just see Japan's government intervening in order to push down the yen. In terms of the dollar index against broader currencies, it was down 2%, but it's since pared its losses to around 0.5%. So we are seeing a bit of a calm returning to the markets. The Mexican peso, on the other hand, it is the most sensitive to the US election results, given that Donald Trump has threatened to review the North American Free Trade Agreement, which Mexico benefits quite a lot as it exports most of its products to the United States. Also, Mexico benefits from large amount of inflows from immigrants working in the US, which return money to Mexico, and we saw the Mexican peso hit an all-time low of 20.77 per dollar. It's since strengthened a little bit to 19.95, around about there. The Canadian dollar was less volatile; it only dropped 1% against the US dollar. If you look at the safe havens, we saw gold surging 5% to a six-week high of 1,337. It has fallen back a little bit to around 1,307. US bond yields, not just US bond yields, but other government bond yields also fell after the election results were showing that Donald Trump was winning. You can see the 10-year yields on US government bonds fell to around 1.70%. It's since jumped back up to around 1.85. So we are seeing some volatility there as well. In terms of other currencies, the euro and the pound, they responded much in the same way as other safe havens, even though sterling in particular isn't really a safe haven, but nevertheless it was following the euro higher. The euro jumped to just under $1.13. It's since reversed to around 1.11. The pound we saw climbing back above 1.25. It's currently around 1.24. But risk currencies such as the Aussie and the Kiwi, they fell sharply. The Aussie fell to around 0.70, just above 0.76. It's rebounded a little bit to around 0.7060. The Kiwi had hit, in fact, a 2-month high of 0.74 just before the results started coming out. Although it's now fallen back to around 0.73. If you look at what's happening with equities, we can see they're all in the red there. We've got in Asia the Nikkei, it's down over 5%. So the Nikkei, of course, not just the fact that the uncertainty created by the election results, but also due to the fact that the yen, a stronger yen is very negative for Japanese stocks, because it would make because of course the Japan stock market is dominated by Japanese exporters, which would be bad if the yen went up. Other Asian equities were also down. We can see the All Ordinaries in Australia down almost 2%. The Hang Seng in Hong Kong. The Chinese stock market was less affected, as it's not as it's more dominated by internal economic developments. But European stock markets, we can see they're all open in the red. Xetra DAX in Germany down almost 2%. The CAC 40 Paris around 1.5% lower. London is less affected; it's just down 0.5%. So yeah, pretty much the risk of sentiment is impacting equities quite strongly. In terms of data, it's a fairly quiet day. We had Chinese inflation data, which were more or less in line with expectations. Producer prices, though, they were much stronger than expected in China. They rose 1.2% year on year instead of 0.8%. So we are seeing signs that inflation is edging higher in China. In terms of European data, we've got UK trade figures coming out shortly, but other than that, it's going to be fairly quiet. We don't have any major US data coming up later, and then much later in the day or early on Thursday, we've got the Central Bank of New Zealand, the RBNZ. They're expected to cut rates to 1.75%, and definitely after the US election results, where we have fresh uncertainty, fresh doubts as to whether or not the Fed will raise rates in the US, doubts about global economic policy, and also, the longer term outlook on global growth. All of that increases downside risks. So that pretty much guarantees that the RBNZ will cut rates to 1.75%. So that's it from me. Thank you very much for watching, and have a great day.